I've watched highly liquid portfolios lose real money. Not because the assets were bad, but volatility forced emotional decisions. Hey guys, Matt here. Today, I want to talk about something that never gets taught and everybody should know about. Today, I want to talk about liquidity. What is liquidity? Well, liquidity in its simplest terms is how fast you can convert an asset into cash. Usually, liquid assets have markets where there's buyers and sellers readily available, okay? Earlier in my career, I thought liquidity was the ultimate advantage. I could buy something in the morning, I could sell it later on in the afternoon, and if something came out, bad news, bad earnings report, if we're speaking about stocks, I could always get out of the position. However, I did realize over time that being liquid is not always the best thing. You see, I've watched highly liquid portfolios lose real money. Not because the assets were bad, but volatility forced emotional decisions. People sold at the wrong time, or they chased performance reacting to noise. All right, guys, I'm going to give you a real world example of this, and I want to talk about Shopify. You see, everybody knows Shopify. They're one of the largest platforms for e-commerce out there. Almost everything that you buy today is off a Shopify platform, believe it or not. But come over here with me to my chart. I want to show you exactly what happened with Shopify. Over here, guys, you can see we have a weekly chart up of Shopify starting in June 2015 and ending in March of 2026. Now, I want to focus in here on what happened during COVID. So February, the end of February, early March, everybody got shut down. We didn't know what was going on. The world was panicking over COVID. Shopify, that month in February, actually broke a new 52-week high. The stock was trading at $600 a share. That stock dropped like a rock to $300 per share. Now, this chart I'm going to show you guys is split adjusted. So just bear with me here. So if we look right here, the stock was at a 52-week high. Within 30 days, the company came down to roughly $300 per share. Now, I want you guys to really sit down and ask yourselves a question. If you had one investment, right, and you watched it fall 50% inside of 30 days, would you get a little nervous? Would you get scared? Would you have sold off your position? Well, that's exactly what happened. You see, most retail investors didn't have a plan. They didn't know what to do. So they sold off their stock because it was liquid and they could, right? However, the smart money, the institutional money, the guys that account for 80 cents out of every single dollar that's publicly traded. I'm talking about your pension funds, your family offices, your endowments. Well, those institutions had what you call excess capital set aside, so they can either get into a new investment or buy more as the stock goes lower. And that's exactly what they did. Because of all the noise in the marketplace, retail investors started to panic and sold off. And the institutions stepped in here at $300 to $400 per share, and they gobbled up Shopify. By late 2021, Shopify 5x'd. Now, I want you to ask yourself a question. Is liquidity still safe? In my opinion, it's not, because what winds up happening is when there's noise in the market, emotional selling starts to take over, and that fear and greed index from chasing performance or not taking a big loss steps in, and sometimes, most of the time, we always sell at the wrong prices. The goal of the deal room is to show you how to take emotions out of the process and invest like the smart money, like the institutions, like the pension plans, like the family offices. Remember, guys, like I told you, public markets are great for liquidity. Private markets are great for structure, income, and long-term compounding. That's why the mantra in the deal room is some capital stays liquid. Some capital is for income and cash flow. Other capital is committed to long-term deals that will work in our favor over time. If you guys are interested in doing private deals, you want to see what's working, what's not working, do me a favor, hit that subscribe button, give me a like, but more importantly, join our free group called The Deal Room over in Facebook. I look forward to seeing you there. Hey, and by the way, check out my podcast. It's called The Liquid Lunch Project.